Welcome back to Golden Rule Radio, your weekly summation of the precious metals markets, and we are here to update you each week on what's happening in the markets related to the metals and the news that moves those markets. And we are sans Robert today. Miles and Tori are going to jump right into what the price action is in the precious metals.
Gold always seems like the best place to start, so still looking at gold. We called for that correction last week after we broke above that long-term trend line. We are coming up on that short-term trend line, but those two are converging soon, right about at the price where we're at now, 1240, 1245. So we are going to see a breakout in gold at some point here in the next couple weeks to the upside or downside. I would argue to the upside, given the track record over the last few months in gold, the way we've been stair-stepping up. Also, before we started recording, we were talking a little bit about the old sell in May, go away adage that you see in the stock market and other markets as well. It's summer. People liquidate some positions. You got vacations. You've got other stuff to worry about, kids to pay for while they're out of school. Traditionally, what were you saying, Tori? June is the lowest price, second lowest price?
Second lowest price, yep. Second lowest average price of the year. And so in regards to the best value, looking at the calendar year, June is one of those values. And the other adage is buy in the summer, sell in the winter. You know, again, we're not looking at the metals as an investment, but it does give you an indication of what the overall price action tends to be in the summer. And we're still up 8% on the year. That 1245 figure that you're giving here, that's 8% up on the year, and yet it's very, very quiet. Still not getting a lot of action. Silver is only up 3%, which has driven that gold-silver ratio to almost 76-1, and that's with silver sitting at 1645. But the real ratio story still remains the platinum-palladium ratio and the price action that we've seen there, with platinum only up 2.2% on the year compared to palladium up over 30%, and that's driven that ratio to 1.04 to 1, which is, again, something we focused on last week. But what do you want to talk about technically with those metals?
Real quick, just both platinum and silver are coming up on some long-term trend lines dating back to the beginning of 2016. So we should see these prices hold as far as bottoms go. Palladium, on the other hand, has been sort of its own monster. Rising and continuing to rise and breaking above trend lines and going higher and higher. And again, the average person might look at something that seems like it's only going one direction and think, I got to get in. And you eventually reach that point where the answer is actually, you got to get out. So we've been harping on the idea of the platinum-palladium ratio for weeks and weeks now. Platinum is the buy, not palladium. I know the palladium chart looks good. We put a lot of people into palladium 5-6 years ago. We're taking them out now.
Yeah,
and you should be getting out now.
880, and it's struggling to move. You know, to me, it's indicative of a little bit of what we're seeing in the stock market, right, with some of the major indexes in regards to the stock. And me personally, I think that we're going to see that strong action in the metals in the fall because of a stock market downturn. So it tends to be that it's not as popular when the stock market's doing very, very well, and yet there's a flight to safety and more of a fear factor. When the markets actually roll over, that's when you see the commodities really kind of take off.
Well, we talk about relative price values between metals. What about relative gains? I mean, when you look at the palladium chart, I don't think it's done going up yet. I think it's got 10%. I think $1,000 palladium again is possible. You know, it's been since 2001, but I think we could get up there again. But that's 10-12% higher. Platinum's got a 100% move.
Yeah, there you go. Relative value.
So, and I don't want to risk,
not at all.
Yeah, I don't want to risk losing 150% gain in platinum because I'm trying to squeeze out the last 10% in palladium. And I sure don't want to do that in my equities position either, with my 401k or with my brokerage accounts, with my Forex account. I don't want to be over aggressive on something just to say, yep, I rang the bell. I got an A+, I got 100%. I'm perfectly fine walking away from something with a very good gain, because I'd rather move into something else to get another very good gain. It doesn't have to be perfect. And to be a little bit earlier, to look for these price moves, or even be a little bit late when you've confirmed a price move or a change of direction, like we've seen in gold, like we've seen in silver, and like we're about to see in platinum. Yeah, look for the big moves.
That's
be
a great
perfectly
point.
happy getting 80% of the return. You don't have to get 100% of it.
And that's why you see platinum go to 3, 4, 5 times the price of palladium. You do not see that with palladium over platinum. So before we leave the metals, I mean, think about opportunity. This is an opportunity to add ounces. You should not be trimming your ounces. Maybe moving from one metal to a different metal. That's what makes sense. But do not trim your ounces here. Be adding to them. We obviously make a market both ways, and we're going to just tell you honestly that way. Other markets, Miles.
Key this week in the equities markets is the relationship between the Dow Transports and the Dow Industrials.
Huge.
Big difference there when you look at the trend lines. The Dow Transportation average, which according to Dow theory tends to lead the industrials. So what you see happen in the transports will eventually happen in the industrials as well, because you can build all the products you want, but if you're not shipping them and selling them, it doesn't matter. Doesn't matter what your stock price is doing if you're actually not accomplishing anything. So with the Dow Transports, we broke below the rising channel a few months ago. We've been holding below that channel. We've been putting in lower lows. We had a bit of a spike up here over the last few weeks, but I don't think it's anything to get excited about. So then you have the Dow Industrials, which although they've been rising, those rises have been weaker. We've got divergence in the charts. And even though those prices are a little bit higher, I still think we've got a 7, 11, maybe as much as a 17% healthy correction pending.
And looking at the commodities too, this to me is a major red flag. You've got oil down over 20% this year, which technically puts it into bearish territory. And along with copper and what you're just talking about in the transports, isn't that a harbinger of economic struggles? I mean, if you look at those charts, if you look at those markets, they really are trying to tell us something. And remember that gold does very well in times of uncertainty. This is a metals podcast. Miles, why do we buy physical precious metals with a significant portion of any portfolio? For a hedge, for diversification. And what are we diversifying? We're diversifying from major market rollovers in our paper assets. We are diversifying from the fiat currency, where you have currency weakness and exposure, things and events that are occurring, such as in Venezuela, in modern currency times. We are diversifying from the central banks in general. We are diversifying from the pressures that can result from geopolitics. So talking about all that, okay, currencies. The dollar remains below the 65-week average. We know that they intend to weaken the U.S. dollar. We know it's something that occurs over time. That's nothing new. You can look at cycles or you can look at long-term trends. The fact of the matter is you want to own gold because the U.S. dollar will lose purchasing power over time. Central banks, here we go, more bail-ins. What's Germany doing? Suspending interest payments on some notes? Are you kidding me?
Yeah, how about that? Germany's Bremer Landesbank has suspended interest payments, or will be suspending interest payments starting at the end of June on 2 of their bonds. So you can probably guess what those bonds did over this past couple days. But yeah, this is becoming norm. I mean, when this happened in Cyprus, people talked about it for 6 months.
Greece bailout, you know, it's happening again, right? Nobody's talking about it.
But every time it happens, we become more conditioned towards accepting that this is just what the reality of our life is.
People, do not get dumbed down. Stop getting numb to what the major news is. Look at it. You know, it's like the congressional shooting at the baseball game. That was something that 20 years ago would have been dominating the airwaves for 3 weeks. And it's almost as if it's come and gone with very, very little attention. Geopolitically, you know, we're diversifying and doing a risk off with metals because of geopolitics. Is anything going on in the geopolitical world today? Well, yeah. You know, here's Trump tweeting on China's efforts to rein in North Korea to no effect. At least he gave him credit. But what he's saying is, look, we're going to proceed here. We tried that. It didn't work. How about shooting down a Syrian jet and an Iranian drone in Syrian airspace? Increased tensions with Russia. If you aren't adding to your ounces in this type of an environment, what is it going to take? It's going to take a herd mentality when everybody else is doing it?
Don't you see that governments and banks and politics and politicians are manipulating your hard assets away from you? This is money that we've earned that is getting taken away from us through these measures. This is why we're getting calls all the time about Bitcoin and about gold and about anything that people are scraping for right now to say, I need something, as you were talking about earlier, we need something diversified into our own hands. So when we're talking about the benefits of gold, the number one benefit of gold is it's yours. Nobody else has access to it. It's yours.
Yeah, wouldn't you like to have it in your hand right now in Venezuela? I know I keep talking about it, but are you paying attention to food lines and riots? Are you paying attention to true poverty as a result of government grab, as a result of moving from socialism to communism? It's 2017. Do you have to really look back to Weimar Republic? No, you don't. I mean, the honest matter is, look, governments are going towards a cashless position. They are coming after, in baby steps, a cashless position, right? They don't want you having that. We just had a bill introduced last week that specifically mentions digital currencies and the need to report whether or not you have more than $10,000 in digital currency as a traveler. It's become on par in that regard with currency. They want to know what you have. Why do they want to know what you have? Because if you have a large cash position or you're out of the digital system from a banking standpoint, you are laundering, you are up to criminal activity. But no, again, look at Venezuela. Don't you want to know that you have safety and protection and the ability to feed your family in the instance that there is a major event such as that?
I always found it ironic that it was John Maynard Keynes himself who said inflation is a tax that 1% of people understand and the other 99% pay.
There you go. That is, you go and get a 4%, 5% inflation rate going, and that means on $100,000, your purchasing power in 1 year just dropped to $95,000. Now, multiply that times 5 years, and you tell me what's happening to your portfolio and why owning physical gold makes sense, because it offsets that. It makes you immune to those currency manipulations and the loss of its purchasing power.
That brings me back to my point when I was talking about highs and lows in metals as well as the markets. Stop trying to squeeze the blood out of the stone. Be ahead of the curve. Stop trying to get that last 2 or 3 or 4% out of a highly leveraged, over-manipulated market.
And Miles, I would argue that our listeners already are ahead of the curve, not just because of this show, but because they're seeking that information. And so you listeners know that you've got an instinct here. It's telling you something. Now it's time to take action. Your level of awareness is greater than 99% of the population that's going to be caught completely off guard. So in terms of our recommendations, yeah, it does. It points right back to diversifying your portfolio into tangible metals in whatever percentage makes sense for you and your portfolio. And you do that now. You do that over time. You cost average. You do that regularly and consistently.
Well, and our recommendation will always be based on the same concept. Wealth can't be created or destroyed. You can't create or destroy real wealth, land, gold, food, things like that. All it does is change hands. So find those opportunities within these manipulations. Work with someone. We're happy to do it with you. Give us a call. Work with somebody that can help you find the opportunities within these market moves so that you are ahead of the curve.
Well, thanks again for listening this week. Make sure you follow us on Twitter at ICA Gold and subscribe to us by clicking on the subscribe button below this video. We're honored to come to you each week and would be honored to speak with you if you call us at 1-800-525-9556. We will spend some individual time with you and creating a dynamic precious metals portfolio for you. So tune in next week, and thanks again for listening.
Have a good week.